guys, it is March the 2nd, second week of March, and quite an exciting time as per usual in the marketplace. Oh my gosh. It's been really funny because today when I look at my P&L, even though I've got, it's structured in a way that makes, like, probably couldn't possibly be more well aligned with things happening. I mean, I hate being right on certain things. And in this case, I think I might even be right for reasons that I would have thought were low probability, which is just, I never would have anticipated things to get out of hand the way they are. FinViz, as we can see, most of the screen is red. Healthcare, I'm really watching carefully because it is showing extremely weak. And some of these names are super, super duper buys. They have huge war chests from having really done well through COVID, for better or for worse. Like, they were the net beneficiaries by a lot. Pfizer in particular, I always come back to because at some one of these quarters, it's really just going to demonstrate that it does not need COVID to really be valued extremely well. I mean, it, again, like I said, has more cash than debt. So if it just paid down that, their operating structure would look ridiculous. And then it's got actually quite a few things in the pipeline. We're not going to really talk about that too much today, but I just mentioned it. And then similarly, we've got a lot of energy. At first was doing really well, but now, for whatever reason, I think people are under the impression that this thing is somehow kind of temporary or whatever it might be. And I think that just is a real misunderstanding of how that market works. Actually, let me pause. David, did you hear anything that turned the energy market in some cases red? Or is it just really strange trading of these stocks today? All right. No worries.
No,
Let me know if you did.
Bother them or sell the.
Yeah, I think they're missing the point of what the news is exactly. You know what I mean? So when we look at the markets here, you can see crude is up 2%. It was actually as high as $1.25 in the week during the weekend. That 118. This is not even the end of where it can go. And you see gold up 1%. And then you've got people, especially Freeport-McMoRan, which I always watch. It has been up a lot since we first started talking about it at like the $36 level. So now it's at $48. And there is just such a misunderstanding of who does what, has what, and will need to buy what. And that is something that I'm going to try to address a little bit today. And I really do think that in these next few weeks, it's really just going to be about trying to find opportunities to get into names that you think are very interesting to you. Now, this week, anyone that is trying to go long, we're going to get consumer credit here in a little bit. I'm fairly sure the consumer is still looking extremely good in the United States. And then later this week, we will get CPI, and that's going to show crazy inflation. And if it doesn't, it won't matter because everybody's looking at this oil price and thinking, yeah, and that gas price, and the fact that pretty much capacity does take some time to get on, and they're pretty sure that this is not going to be alleviated anytime soon. Okay, now, in fairness, the next contract is the April contract. That is kind of, in a lot of ways, the wash, but quite frankly, since most countries, period, had a drawdown, ourselves included, because Biden tried to get the oil companies to increase CapEx without a true understanding of how that exactly works as relates to the commodity curve, when he was like, look, I'm going to release all the reserve if you guys refuse to pump more gas. And he did it. Dumb. But whatever, it is what it is. At this point, it's not like crude oil reserves or nat gas reserves are at all-time highs globally. In fact, the exact opposite is the case. Now, April 2, you could just imagine it from a temperature perspective as well as what do you typically see visually perspective. The summer, the spring is one of the low seasons, as is the late fall, like September, etc. You got to get your capacity up before you got like a little runway between April and June. If production isn't up a lot, and when I say up a lot, I mean up enough to both compensate for the drawdown in reserves that so many are taking, and also compensate for any production disruption as a function of this wartime situation, and also compensate for any kind of stockpiling people are going to do as a nation. If you don't do that, between right now and June, you get into summer heating season and you got problems. Period, is what I have to say to that. So realize that the oil volatility is not going to change. And if anything, I don't think people are really appreciating how much they're actually needing that industry to bring online. It is a little bit like how people think, oh, inventories are really only increasing because people are restocking, but in fact, no, friend. It's a real misunderstanding of what's been going on for the last 2 years as it relates to all of this. Those are some things I want to talk about. CPI is not, unfortunately, going to be a non-event. It's going to be really big. Then you're going to get a lot of, you might get some rally off of that because they think that's the number and everything's going to get better, but I'm not seeing it. I do want to talk again about the shorts that we have been focused on. Again, I can't highlight enough how there are no meaningful, in my opinion, standing armies in Europe, and so there's only one way that that area on the map gets supported, and that's going to be probably U.S. troops. Now we have stations all over Europe. I'm sorry, we have military bases all over Europe, as you can see, and then we've got a big naval spot in Spain. But I guess it's actually called something a little bit like not Spain, but whatever, you got me. And from there, if we were to bring in more troop deployment, it would most likely come on this naval ship. I mean, we might fly them over, sure, whatever, but it would be probably on this naval ship if we were going to have the Navy do it. And they would have to come through the Mediterranean on the Straits of Gibraltar and then come through and go to the Black Sea and sit there, right? And this is, if you look at what this is, it is a very legitimate scenario that this is going to be potentially a problem for the cruise liners. And thus far, we've really canceled this. I don't remember them saying much about canceling the Black Sea cruises. Maybe they have, maybe they haven't. Even if they have, it's not a huge part of their revenue. The bigger part is here. This absolutely will impact Carnival more than Norwegian. Well, no, that's not fair. Norwegian actually does a fair amount up here in the way of cruises in the spring, and they definitely do some Mediterranean Sea cruises. But Carnival also owns AIDA. Not sure how the Germans pronounce that cruise lines, but the Americans, AIDA. That is a 13 ships of their 50, and also 11 of their ships are Costa, which is an Italian branded cruise ship. And usually they bring those ships from, right now those ships would largely speaking be in the Caribbean and in Latin America. Some would be in Singapore, but because China's really shut off its borders, it probably rerouted most of its stuff over here. And usually in the months of, in late April, you'll see some of them go. And then in the first week of May, all of them usually head over to the Mediterranean Sea. So this, in my opinion, is not being accounted for yet. And again, the cruise liners are not profitable. All of them, not profitable. And they really were banking on an overall improvement in global travel. And I believe global travel will increase, but I believe this is going to create a whole mess for them. And it's going to create a whole mess because they still have to source food, which is not going to be great during this period of time. They're going to need to source energy, fuel, in other words, which ain't great because they're probably, if they're not able to get in here, then they're definitely not sourcing from Russia as far as that goes. They'll be sourcing from these countries who will probably be gouging. And yeah, overall, I don't love the cruisers here, and they don't trade on valuation. They trade on the hope that that travel recovers fast enough for them to have pay off some of those boats for which they still owe a tremendous amount of debt, and also other debts that they incurred. And remember, this is very important to remember about the cruise liners. All of the cruise liners are incorporated in like these countries that have nothing to do with any one nation. So they do not get the benefit of U.S. stimulus package or stuff like that, right? Most of them are, they're all offshore incorporated. Anyways, I don't like the cruise liners here. I continue to short them. Among the airlines, I don't really necessarily know precisely how to tell people to short, but I will tell you that of the three majors, Delta, American, and United, Delta had taken the strategy that they would go international, particularly Europe. United, as you know, is going to always be impacted more on the Asian routes. So Delta weakness right now kind of makes sense to me. But I feel like with Delta, there are some things that can be done to help them out. But with the cruise liners, it's really the investor and high yield debt markets that have to help them out. Now, most of those companies in travel that are really hurting are absolutely gonna need to. This year is probably okay as far as they could be okay with paying off some of the debt that's due this year and then rolling it, however you want to think about it, back. In 2023 becomes a real problem, and it'll start to depend on the month. So whereas they had a 2-year buffer, so last year you could play certain games, I think this year it's a little harder to play those games. Additionally, though, these guys are like high yield pros. So, for example, Royal Caribbean used to own a bunch of different cruise lines that were European. In particular, Pullman Tour was owned by them. That is a Spanish cruise ship that I personally have been on more than once, strangely enough. And they sold it, the way they spun it out like a champ is like no tomorrow. So they do some of the workout on the bankruptcy, but largely speaking, they did help them clean up the balance sheet a little bit. So realize that there may be some finagling on the high yield side, but overall it's not great. Okay, so cruise liners, I'm still short, even though I was short them, call it, I think I'm up 100% on the options at this point. I've maybe taken a few profits here and there, but really I'm gonna stay there and really recommend that you guys find literally puts anywhere. Try to get 2 to 3 weeks back, just because the volatility will be fairly intense as different news items are shocking the marketplace, and we are largely speaking out of earnings season, so that macro news flow is going to prevail. As relates to S&P companies, we do still have 2/3 of them doing great. Supply chain issues are a big deal right now. And the one that I think is crazy that people want to promote, and here I would absolutely, if you wanted to do kind of just, hey, I want to take a bet, what bet would I take? It's really Dollar General. And the reason I say Dollar General is Dollar Tree, despite raising its price a quarter, coughed up the quarter. And they coughed up the quarter because one extra quarter does not compensate for how high freight has cost them. These companies, largely speaking, are importing this stuff in from Asia. So unless you think that whatever finally came off the boat because of the improvements on the port is going to magically help them guide upwards or alternatively compensate for the massive rise in fuel prices, then yeah, go ahead, trade this thing up to $2.10. It trades at 15 times next year earnings. Alternatively, you could try doing this. Now, this thing, I think at one point, traded all the way up, as you can see, to 213. So if this reports on the 10th, if you are going to just do it as a lottery ticket, play with it a little bit, because it is clearly swinging intraday, and this option pair does go down to $2 right now. When I pulled off the screenshot, it was at 250. I think I've kind of, when I'm bored, I'll check in and see and smack it at I think I put some limit orders in at 225 and got smacked this morning. So stuff like that. So, and I do think the market's going to be really wild this next period of time. Now, some other things I want to talk about. I want to talk about copper really quick, and uranium. So one of the broker dealers this morning came out downgrading Freeport-McMoRan. I think they did it just to hurt my feelings, but it's okay. I won't take it personally. But they downgraded it off the idea that global copper was going to decrease in usage because the economies would not be growing the way that was originally thought. And while that's an interesting concept, and I don't know exactly what numbers he's showing, what he does have to account for is that Freeport-McMoRan makes 3 things: copper, gold, and molybdenum. So step 1, know that. Step 2, copper is actually used. So the bet you're making is that the way in which the economies will slow down is such that they're not going to be building infrastructure in any way. But the specific infrastructure that we're really talking about here is the infrastructure that gets you off of oil, right? It's going to be electronic vehicles and all of that good stuff. So that's an interesting bet. Hard to say what the answer is to that. The third thing really to note there and I'll try to draw this up on a slide at some point, is that you're betting that the tightness of that copper market is not going to just be filled by any like little break that you get in copper demand from this. And then the third thing that you're really betting is that no one's going to buy naval ships, and no one is going to, because most of the naval ships, given the properties of copper, will have quite a bit of copper in them, and that also the types of bullets that will be used will not be cased in copper, which is something that unfortunately we just got to talk about, so if you believe that the military will not sop up that demand, then it's hard to say because it's very hard to find statistics on military usage of copper, but it's a thing, for lack of a better way to say it. So that would be that. And then molybdenum definitely has military usage just because it has such a low boiling point, and Freeport-McMoRan definitely makes molybdenum. So I'm probably saying it incorrectly because it has a lot of letters in it and sometimes. Freeport-McMoRan, I think, is traded to the 48 level. I think I'd watch it a little bit as this marketplace tries to decide what's up if you're not into it. But I would definitely put it on the radar screen. If it tries to make a run for the $42 level, I mean, that would be really dumb, to be honest with you. But we'd really have to watch this copper price and see what's going on. So I would just really, this is down 4% and change, 4.5%. Freeport is down closer to 6-7%. They should probably be trading in line, but if it's something to watch, but not today necessarily, and certainly not in front of the inflation numbers. Let all that stuff play out a little bit and make sure that the market is going to continue a downward trend after that inflation numbers and people aren't just going crazy. The other thing that I really want to talk about is uranium. Now, uranium is up 2.66%, and the way that I typically play it is this index called URA. And here's the thing. The reason I play it that way is because the URA is comprised of a bunch of companies. You can see it, Cameco, all the way down. And these companies are not U.S. companies, so it is a little bit more difficult to go through the financials of these and make sure everything is super cool. It turns out that like in 2008, when I was originally looking at these companies, things were not super cool. So it really does require that you go through one by one, and you can see some of them are really rallying. But I want you to understand a little bit about the uranium market. So I've put together a few slides. Probably will continue to grow our knowledge together of it as I get my statistics all updated so that you can benefit from it. Here is the global. So a lot of these stats, because uranium and because of various events that happened in the early 2000s, uranium hasn't been interesting for a very long time. So a lot of the statistics that I'm trying to update are from like 2015, 2014. Realize that the world may have changed a little bit. But the first thing I want you to know, the first thing I want you to know is who has nuclear reactors and who does not. Okay, so first, the United States has most of the nuclear reactors in the world. Then we've got France, and then we've got China. And part of the reason you got to kind of see how that lays out is because it does take 5 years to build a new nuclear power plant. And in the U.S., it takes a little bit longer than that because of permitting and all the other stuff that's going on. So it's very hard to add nuclear capacity right away. You'll see Germany's not on this list. At one point they had 17 reactors, but they literally wound all of them down, and they really were slated to be completely wound down. I think the last one would have been 2023. So if they're going to reverse that, it's not like, oh yeah, we'll just put it back on tomorrow. Additionally, the one thing that's kind of interesting is that although this is the map, I just want you to see where the uranium is. If there was, I'll keep looking for ways to get just really global uranium, not global uranium companies. But as you can see, a lot of the uranium is in places that Europe's not going to be allowed to access, right? I mean, Kazakhstan maybe. And additionally, if you just look at who needs the uranium, which is the U.S., even though we have uranium supplies, we do potentially probably have dibs on some of this uranium, but China is absolutely got dibs on some of this stuff that's coming up. So, and then France as well probably has dibs on it. So realize that is a thing. Now, here's the thing is that I mean, I get that it's not in my backyard situation, but given that you're not an oil producer, you could have gotten uranium from this country down here, which means you no harm and doesn't really have any kind of issue whatsoever mining stuff. So I do think that that's strange. I do want you to see, and this is why I'm saying that when you look at companies, especially in the mining industry, you really have to double check that they don't have their minds somewhere that you wouldn't think they do. Canada, a lot of the companies that are uranium based are in Canada, but I want you to just see who actually produces the uranium. Yes, Canada produces a lot, but most of it's coming out of Kazakhstan, okay? So you really want to take half a beat and make sure whatever you're seeing in Canada isn't actually just incorporated in Canada for the purpose of raising money for mining in Kazakhstan. And the reason you want to do that is because as a result, it may not be able to sell on the global marketplace the way that you were anticipating it would be able to do so. So there's that. Just want to share that with you. And then, yeah, so with that, I think I'm through the things I prepared. Oh, last thing I just want to mention, and I'm going to start trying to educate as much as I can about China, which I really think is both our major trading partner and our geopolitical frenemy. Okay, I think we're frenemies, quite frankly, and I am worried as a person that looks like this that we're going to continue this march of aggression toward all Asian folks through this geopolitics. And I'm not a fan of it because it doesn't serve any purpose right now. There is very little, and even though there is actually quite a lot in the press that's coming out talking about how there's some kind of antagonism that's going to escalate. If you read the press from Reuters or Associated Press, you couldn't see possibly different language ever. And the thing that's strange about that is that before Russia broke out and Xi Jinping had not solidified his power in China, all of the press was Xi Jinping using propaganda. Even Reuters and Associated Press, which tends in the Western world to stay more neutral, was able to find an article about Xi Jinping saying something quite aggressive towards the U.S., at least once every couple weeks. Now, all of that is gone to zero. So this idea that China's trying to be an aggressor is really strange to me, other than seeing it in the Western media. And it's really unfortunate because, again, I just want to show you, China does have a very large border with Russia and does actually take in some things from them that are fairly important to its growth. So I wanted to show you, here are China's, this is from, I've posted it, it's like OEC, I posted it in the Discord so you can explore it. They've got lots of great data. These visualizations come from 2019, but quite frankly, they haven't changed very much. Okay, so this is the exportation of goods and where they go. Okay, and as you can see, a big chunk of them go here. A lot of them are just swishing around Asia anyway. And then the U.S., they send 16% of their goods as of 2019. So this number may have swung around a little bit because I've seen things as high as 18%. I've seen things as low as 15%. But approximately 15% of their goods come here, and then Mexico and Canada to a lesser extent. So realize it's not really something that they're excited to see, especially the nature of the goods that they're selling. It's not like war-related weapons is on here, as you can see. You know what I'm saying? These are things that you would typically want for an improved economy to move forward. Now, imports into China is a different story. Mostly they're importing oil, so they're not stoked necessarily. This is from 2019, and they have done that. This is part of the reason why I think they went to coal, because I think they kind of saw the writing on the walls and they wanted to kind of make sure that they had enough in reserve. China, unlike other countries, did not try to lower the oil price by releasing its reserves. What it did is it moved to coal and just tried to hoard crude oil and nat gas. So for the record, that's what happened. And you can see the other things that it imports subsequently. And you can see as well that the U.S. is only 6% of the stuff that it imports. But more importantly than that, you see this number right here is 1.5 trillion, and it's maybe a little bit higher, but so is this number, which is the total amount that it exports. It is a net exporter of goods. So really, while it is it is not to the benefit of China for this war to perpetuate in some crazy way, or for it to escalate aggression towards the United States. Strategically, they didn't do some of the stupid, well, let me use different words. I don't want to be triggering people. They didn't do some of the, what I would consider slightly less strategic stuff, like failed to stockpile fertilizer or failed to stockpile certain types of energy that it might need. It didn't release its reserves. These are all things that certain countries have done that might not be the smartest thing in the world to do, but it is truth and it is what's going on. Now, I want to show you again, this is what the U.S. imports in general. In this case, for whatever reason, it ends up, when you flip it, being about 18%. It's just a trick of math, but this is 2019. What I would say is where 2019 changed from 2020 and 2021, those statistics I haven't yet been able to access. Maybe some of you viewing this have access to it, is that this number went down because of our ports being a disaster on the West Coast. My suspicion from having traveled to Europe is these numbers went up. And the reason I think that is because this initiative was meaningful to helping. People have said that the inflation in the United States was higher than it was overseas. And this is all light green, which means China is the third trade partner for them. So it's not a huge percentage. But what I saw when I was overseas was in almost every single store, a lot of goods that were made in China. So my suspicion for sure is that this number went up significantly during COVID because of this beautiful trading route that is somewhat optimized, quite frankly, from the perspective of energy, transit, et cetera. Because most of this is going to be on rail. Then you got some boat action that's happening as well, but most of it's really rail. Anyway, I think that's what happened. So either way, I think it's not the worst thing. Now, the other thing I want you to know, this slide comes from this website that does a lot of balance of payments deficit. I don't always love everything they do, but I did love this data visualization. I do think they're worthwhile checking in on, so let me not throw shade at someone's slide that I'm using. But this is very important. China owns 15% of U.S. public debt to foreign countries. So again, it's not really trying to, but those things lay out as well. And then you can see what the largest imports and exports are that might be impacted here as well. And really, I've mentioned this before, the U.S. autos industry and the Boeing, things like that, really benefited during COVID because China kept buying. The other areas within automobiles that I noticed very clearly, more than one company, was anything related to hydrogen-related vehicles. I do actually think that via purchases of things from like Cummins, PACCAR, et cetera, that they are helping those companies fuel their R&D as relates to hydrogen. And that just has to do with their mass transit setup and population density. So there's really no reason at this point for China to want to escalate aggressively, even though the powers that be keep trying to argue like they would. The semi issue right this minute probably can, yes, it is definitely important. Yes, we have talked about that. But for the United States to escalate is a little bit strange because we still have a few quarters before we start producing big capacity. Anyway, I will pause there and take questions. Any questions?
Oh, hi, mate. Yeah, great, brilliant. You absolutely killed Amazon.
Oh my gosh. Yeah. I mean,
let me read you a tweet from a so-called expert. It says, buying Amazon is like buying two companies under one ticker. AWS.
That's true.
Yeah, right. But they're not a startup, which you said, right?
Yeah, they're not a startup.
Both have independent and significant moats and leads in their respective industry. Both are secular growth with long tailwinds. I personally believe they are undervalued today.
Well, everybody's got an opinion. I'm not going to say that everybody's opinion is right or wrong, but I will say this. I'm still going through all of the retail companies that reported, and you've got companies like Costco, Walmart, like TJ Maxx, Target, all of these companies compete with Amazon, and all of these companies have something in common. They didn't have massive crushing sounds on their gross margins and operating margins. somehow Amazon had the sound of it. I mean, their operating margin sounds like a trash compactor, how bad it was. So while yes, they have a moat and yes, they have all this stuff, my real thing that I think Andy Jaffe's going to have to prove in this next quarter is that although he is a tremendous executive and a huge brain in the world of the cloud business, we don't know yet how good he is at the retail business. And unfortunately, thus far, the answer, if we were just to look at the results, is not so great. You know? Like,
Yeah,
we're talking about, go ahead.
I wasn't arguing with you. I was
No, I know. That's my response to that tweet. That's why I'm not very good at tweets, because there's no way I can get that in 180. Like, you have to say whatever the character says. So, no, I know. Isn't it crazy? The love of Amazon. Look, it's not, like I've always said, for anyone that's looking at Amazon, do I think they're going to zero? No. Do I think most of the buying is coming from people that just want to own it for like 20 or 30 years? Yes. Do I think it's dangerous to buy Amazon if that's the primary source of the buying? Yeah, it is. Because as soon as that person's done, there's no one else really buying it because of valuation. You know, like adding to Amazon right now is not it's bold. You know, it's a bold move, but I think it's not necessarily the best use of your capital. The best use of your capital is still Google, in my opinion. It's trading on a 20 multiple, and I think if I was confused that most people looking at Google are looking at it the same way I am. I think that the fact that the stock is somehow, I mean, it's down a lot today, don't get me wrong, but it is no longer trying to always, like Google just has more of a moat. I don't know what to say, like Google has a moat, not just in one business, but all of it. It only gets like a 22 multiple. It's got a cloud business, If you want to give Amazon a 50 multiple for its cloud business, but Google a 20 multiple, because look, let me tell you, the other businesses that Google has all also deserve very high multiples. They're all massively profitable, massively cash flowing, and none of them created a crunching sound to operating margins. So to me, you should buy Google, right? If your issue is I would like to buy one of the FANG stocks.
Yeah. Also, okay, good. Next question,
Yep.
nickel, which is used in EVs, and 5% comes from Russia. I mean, where else does it come from?
Brazil.
Okay.
I'll do a nickel map because you're right. I should go through all of the major ones, but really there aren't any really big mining companies in the U.S. There are a lot of smaller ones that are outside the U.S. Nickel's a little bit of it's a little bit special. So I think so. It's nickel, cadmium, and cobalt. One of the things with the U.S. that makes it hard for us to mine is that some of that stuff is under Indian reservations. So it's going to be mining companies that have operations overseas if they're going to be mining those three things. But Vale, like I don't cover these names and they're so funky. Vale would definitely be one to take a look at for sure.
No.
In Brazil.
Nickel,
and in fact, I am actually very, very small because I refuse to go too big outside of my skis. But I do have really small positions in the ETF, the Brazil ETF that MSCI puts out. I think it's EWK. No, that can't be it. EWZ. EWZ is the MSCI Brazil. And occasionally I'll put a little nibble there at like 35 or something, but much farther out because Brazil is also a net beneficiary of all this. They're going to be neutral as they come. They have great relationships with the United States. Yeah, they got to import a bunch of fertilizer in from us, but they produce a lot of, they are one of the bread baskets of the entire world. So no one's really going to mess with Brazil. And everybody's going to continue to trade with them. They're in a great location because they don't really, if it hits the fan, it's not like they're going to get dragged into it very much. And they still have all that oil offshore, and there's this, there's that. They'll be fine. So Brazil is a very among the countries that should be fine. Brazil's actually looking pretty good to me, but at the same time, it's almost all metals and mining stuff plus agriculture. There's some consumer products in there. and also it is still kind of Brazil, so for better or for worse, it's something to take note of. And then just trying to continue Europe. That's the VGK, which I've mentioned before. And at first, I was really sensitive talking about this. I think we talked about this in January when it started to become very apparent from the earnings reports that Europe was not doing as well as the United States. And then we were hearing a little bit about Ukraine already back in January. And I was like, I kind of feel bad about shorting the VGK because it's full of really great companies. If you look at its holdings, it's going to have stuff like Nestle, et cetera, in there. But since this is escalated and they literally are not going to even potentially, like it's both fertilizer and all this stuff. And then financial services in Europe is not necessarily going to do the same thing on the banking side as the US will benefit from. And that just has to do with what's going crazy with their currency, et cetera. This, to me, even as it rallies every other day, I just try to find ways to short it, for lack of it, or stay short it. It's required a lot of sitting on my hands, though, I'm not going to lie. I just don't see a way that any of this resolves on Europe without some real true concessions, some really true, really big concessions. I mean, it's so, they came in so low stacked into this conflict. And I think this is my favorite data visualization yet that I've been able to find, even though there's some real impressive data visualization work that's happening these days. And that's this one. Hold on, let me share my screen. And this again is in the Discord as well, so you guys can see it leisurely. Now this comes from 2016, but really these numbers are the same. And I think the key thing is when the UK exited Brexit, they took a bunch of oil with them. To the extent that they've made progress on decreasing the consumption of oil in the UK, this actually looks pretty good. And you can kind of see how they're kind of like, yeah, we're going to pump more oil. BP and a couple of the other big oil companies that are, but this is just, it's just bad. I don't really know the other way to say it. They really, and then one of the things too that I find fascinating, if we're just to talk geopolitics and not necessarily stocks, is Sweden and some of the Scandinavian countries, and you can read this all the way back to World War II, they usually try to stay out of the mix a little bit. And they're thinking about joining NATO. I think Denmark was having a referendum to try to figure it out. This is all something that is really a June timeframe situation. I really think it would not, I mean, given how much these, oh man, it's really about splitting the bill on defense. And I'm not sure, man, boy, would it be a big tax to those countries to do it. But we'll see how it happens. We'll see whether cool heads prevail and everybody just calms down, or we end up just escalating the living daylights out of things that really had no business being escalated. I really feel like there's so much manipulation that's happening, and it's really, again, the reason I get sometimes a little upset about the whole situation is because, again, there is no standing army, and there's no meaningful standing army that, if something really broke out, wouldn't drag us into it, and then it would be a function of whether or not we're going to get dragged into it or not. I've shown before, and they're in the Discord, who has how many troops and who has what. And, it's not good. It's not good. If you have loved ones, if you have people that you know that are in the military, it's not good. Cool heads hopefully will prevail, though.
Yeah, Winston Churchill said, America will always do the right thing after exhausting all the other possibilities.
Yeah, let's hope. Let's hope. Any other questions? Okay, cool. We'll end it for today. Good luck out there. It's crazy. Take care, guys.